The government has withdrawn the stockholding limits for sugar dealers. Whether manufacturers are happy with this particular move, will they need more moves? Sugar prices, I'm told by Jayesh, have risen overnight on the international bourses as well. The question mark is, what does all of this mean for the health of the sector? What do the next 12 months look like? Who better to speak about this than Narendra Murkumbi of Shree Renuka Sugars joins me right now on the show. Mr. Murkumbi, thank you so much for taking the time out. Now, firstly on the overall health currently, because I remember the last 1.5 months, the number of chats that we've had with sugar manufacturers as well. Because of the falling sugar prices, there has been a bit of a stress at the start of the new season. Have things eased a bit, or do things look like they'll ease a bit, or does the government need to do a few things to ease things up a bit?
So, Niraj, I think yesterday's announcement will definitely stabilize the market. We have a balanced supply-demand situation in India this year. So, the sharp fall in prices was a bit unexpected. I think there are some players in the industry who have no access to working capital, and that distress selling was mainly what was pressuring the market. Now, with dealers being allowed to step in and pick up stocks at these valuations, I think it will definitely stabilize the market. More importantly, you should note that the timing of this move, it's one day after the Gujarat election results have been declared. And according to me, it's a very early sign of the new focus on agriculture and the agri sector from the government. And I would expect more such moves. So I don't see this move as one single step in itself, but as a signal of how fast they're willing to move in terms of supporting the sector. So we could see, for example, an increase in import duty if that is warranted. Even though now the need for that has reduced since the world markets are up about 5% yesterday, and we are expecting a big rally in January as funds rebalance their portfolios towards commodities that have fallen in price over the last 12 months. So all in all, I think a supportive sugar scenario. We do need to do much more on ethanol, and that is where I would see the next set of actions from the government.
Okay, so that's the big picture. Now let's try and break it down, Mr. Murkumbi. Firstly, it's very interesting that I hear you say that funds may reposition their trades or their investments into commodities that haven't done well in the last 12 months. Would you expect this to happen in a big way come January? And what kind of impact would it have on the Indian sugar prices as well? And will it happen in the next, 30 or 45 days?
Well, I think it will be largely supportive for the world market. The world market is about 40% lower than the domestic price at the moment. So I think that gap will reduce. The way to link back to the world market now is to actually scrap the export duty on sugar. We are the only country in the world that has taxes both on imports as well as exports. So, if we have that window open, even though exports are not viable today, I think that's another step towards liberalizing the sugar sector, also giving an outlet. In fact, certain types of specialty sugars like organic sugars are already viable for export if you scrap the export duty. So that is another step which you can then link the rising rising world market with the domestic market.
And I believe a representative of this was done as well. And the industry was hoping for a lot of moves like the one that was done yesterday, including the scrappage of the export duty.
That's right.
The rumors that I heard was that such a move could happen by December 31st. Is that in the offing?
I'm not privy to the actual timing of the decision, but I think there is no need to keep the export duty anymore, and I think it will be another positive sign for the sector if that is scrapped.
Okay, so hypothetically, if that is done, Mr. Murkumbi, and the move that has been done yesterday as well, what kind of stability or uptick does it give to the sugar prices, which in the domestic markets too, if I'm not wrong, have fallen quite a bit in the last 2 or 3 months?
Yeah. So I think this will keep, we are approaching the next quarter is when about 60% of total production for the year happens in just these 90 days. So I think this move plus an expected move on export duty should stabilize the price, maybe move it up by a rupee, and then we would expect the domestic price to go up further in the off season, and closer to levels that we have seen throughout last year.
Okay. Now I read a comment that you had given to one of the newspapers in the month of December sometime, that because millers in Maharashtra have committed to pay slightly more than the fair and remunerative price, the current pricing of sugar was not viable. would you believe that with the rise that you're talking about, the potential rise or the possible rise that you're talking about, it might just become break-even or remunerative for millers in Maharashtra to do so?
I think integrated millers would definitely be profitable. I think there is still a challenge on the older, especially cooperative mills, which are just producing sugar and don't have any cogeneration or ethanol facilities. One of the big things this year is that the price of molasses has gone down a lot. So those of us who produce ethanol are positively impacted because that's a raw material, whereas those who have excess molasses are suffering. Especially in North India, the price of molasses is now virtually zero. So it depends on how well integrated you are. It could be a plus, it could be a negative.
Okay. Now, if you can, and I know this is a bit of a throwback to the last 3 or 4 years maybe, but what's really happening with the ethanol blending program? One, a lot of people get confused with the percentages of blending allowed. Two, even if the percentages are known, people get confused with the kind of offtake that people are that companies might be witnessing from the OMCs in the first place as well.
Right.
What is the actual rules on the ground, and what is the scenario that is happening in the as well?
Yeah. So this government is very clear. Ever since it's taken office, the mandate is for a 10% blend. At today's consumption of petrol, that translates to about 313 crore liters a year. But at the moment, the total offered by the industry is about half of that amount.
Okay.
So effectively, if all that material is supplied, about 150 crore liters translates to an effective blend ratio of 5%.
Okay.
So we are far away from the target. In other words, we have a market which is twice as big as what we are currently able to supply. So in fact, while sugar is balanced, ethanol is deeply undersupplied. And there is great potential to grow that production.
And the whole production offtake is happening at a price that is
fixed by the government.
And desirable by the industry as well?
I think
the industry asking for more out here?
I think, there is a kind of, general policy intent to keep it in track with cane prices. So we are asking it to be increased at the same pace that cane prices are increased by the central government.
Okay.
At the moment, the price is remunerative, but next year we will need a higher price.
Okay.
If we have to follow that same policy.
Okay. And is your entire ethanol capacity operating at full capacity utilization and getting the necessary offtake as well, Mr. Murkumbi, for you in particular?
Yes, we actually buy a lot of molasses from outside, so our intent is to produce as much as possible.
Okay. Now, I know we can't get into specific comments about Shree Renuka Sugars as a company, but I just want to know, do you believe that the new sugar year, which is for a benefit of viewers who don't quite know, that the sugar year would mean the start of the season, which is October or November, and until the September of the next season. Does this new sugar year look a lot more promising to you as a company and for the industry at large as compared to the last one? Because we've seen a bit of a revival which got maybe snuffed in the bud for certain companies.
Well, last 2 years for us in the south and in Maharashtra, we've had a very big drought and much lower cane compared to our capacity. This year is better, and given the monsoon of 2017, we expect a significantly higher production in our part of the country next year. So things definitely from a volume perspective are picking up. Okay. And I think that is a big positive. I think last 2 years, the mills in North India benefited a lot. Higher prices, great capacity utilization, improved agricultural productivity. So probably those big one-time surge that they had is probably ending, and now they will be more stable. But for us who actually sat out that kind of revival for the last 2 years, because of drought, I think these 2 years are very important.
Okay, interesting. Mr. Murkumbi, thank you so much for taking the time out and joining us. I know you couldn't speak too much about your company, but in a limited way, it was a good sense of what's happening with the space as well. In fact, we spoke to one of your peers a day before as well, and that's the 30,000 crore South India-based conglomerate with interests spanning from financial services to sugar.